Good morning, everyone. My name is Don Daniel, founder of P.I.L.L Method International, and today's show is going to be a fantastic show. Some of you have heard of, if you're thinking about getting a mortgage, all right, and you're in the midst of it, and you're looking at maybe an FHA loan where you're putting about 3.5% down, or a conventional loan where you're putting about 10% down. And some of you have even saved up enough money to put 5% or 10% or 20% down, 3.5, 10%, 20% down on your mortgage, and then you can move in. But today, ladies and gentlemen, we have a special guest who's going to be talking about how to get this at zero down, 0% down, no down payment. Can you imagine? No down payment on that mortgage. And we're going to show you how you can use that money that you've already saved differently to save you thousands of dollars and take years off your mortgage, and with no down payment. Are you ready for it? Are you ready for no down payment today? Let's go. Good morning, everyone. Again, my name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. P.I.L.L stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. And for 19 years now, we have been bringing this message to the public on how they can save money on interest on their loans, on their credit cards, on their mortgages, on their student loans. And if they choose to, they can pay off everything in about 7 to 9 years. It is amazing once you get the education on how much interest you don't have to pay. But listen, folks, today, oh my gosh, when I heard it, I got so excited. I needed to make sure you found out about this. Every now and then, some special information comes along that changes the game. Mr. Jerome Pemberton, who we'll be bringing on here in just a couple of seconds, has done the research. He's done the work, and he knows where to go so that you can get, he's put together a package so that you can get zero down payment, 0%. So we're talking about, people talk about 3% down or 10% down, even 20% down. How about 0% down? If you don't start inviting people in right now, I mean sharing this right now, whether you're on YouTube, Facebook, Twitter, or LinkedIn, start sharing this with your friends right now so that they can hear how they can have a 0 down payment mortgage. I mean, no down payment. Oh my gosh. Mr. Jerome Pemberton, how are you today, sir?
Oh, I'm doing amazing today. Thank you, Mr. Don. I'm so excited. I've been waiting for this for a long time, people. Don, I've been doing this for 25 years. Started out in the mortgage business for 10 years.
Yes.
This is what I found out. I got to do full disclosure. Today is for entertainment purposes. I'm going to disclose some things today, right? Don't get offended by some things I say today. I'm telling your community. Right?
Okay. Okay.
Like you're the master. I call you the surgeon, Don. And let me give everybody a plug. There's a lot of things. I'm in this industry, right? And I started as a loan officer. I'm a realtor, guys. I help people buy houses, and believe it or not, they don't put a down payment down. They can keep their money, right? But here's one of the things I want to make sure everybody understands. This is a game changer, Don. I thought I knew and understood about some money and how the banks really work, but when I bought this book, and I started reading this book, I said, I have to understand, because I can help somebody get in the house with very little money out of pocket.
Yeah.
But I didn't realize how the bank was robbing us, because it wasn't about the interest rates that you're talking about. You taught me so much about it's not about the rate. That changed the game for people. What we've been told for years, right, is that we were trained that you had to put a down payment down. That's what we were told. We were told all these years that you had to put a down payment down.
Yes, that's what I was told.
Hey, that's how I got in this business. My first house that I put down, I was studying, and I was like, well, if an investor does not have to put a down payment down, they're looking for use other people's money when they're buying a house to make you a renter, right?
Right.
And then when I started thinking about it, I was like, then why are they telling us to put money down when investors looking at trying not to use any of their money to buy a house and make us a renter, right? There's banks out there that will give you majority of the money. They've been here for years, and why nobody talked about it?
Wow.
Why nobody talked about this? Why nobody talked about this? This is not new information. It's been here for a long time. I've been doing this for over 25 years. In my first house, I put 3% down. The other 3 houses, Don, I didn't put any money down.
No money down.
No money down, Don.
Wow. Listen, folks, listen, if you want to get in on this conversation, I see that people are coming in here right now. You want to click on the link that we're putting in, that's pinned to the top of the page, to the top of the comment section right now, and come in and you can ask questions live from Mr. Jerome Pemberton on how this works and how you can get a hold of him, and he can help you to buy your first house or your next house with no money down. I have somebody here that just says they're following. There's somebody watching us right now on YouTube. D. Monet Moss says, I follow Jerome Pemberton. I just bought a house, 0 down payment. Did you really help this person? You can do this for other people, not just for you.
Here's the thing, what people don't understand with D. Monet. She came in with a plan for her family.
Yes.
Right? We don't let the bank tell us which product they're going to give us. We go to the bank fully knowing our numbers and going there and say, this is the product we want.
What?
That's what we do. We tell the bank, this is the product we want. So the D. Monet and her family, I call the agent down in Florida because they don't know nothing about this. So this is what people think. They think just because you're a real estate agent, just because you're a loan officer, you know this stuff, right? That's what people think. You could be a loan officer, take a 30-hour class, have a high school diploma, and start selling some loans to people, know anything about money. You could be a real estate agent, take 180 hours or wherever it is, know nothing about money, but you can open up a door for somebody and then go on Instagram or Facebook, right? And basically say, oh, I helped this person close a deal. Get out of here, right?
Okay. So what you're saying is when it comes to how loans actually work, that's not covered in their class to become a real estate agent. To sell mortgages, you don't have to know how a loan actually works. That's not covered in their classes. They're not tested on it. How an amortization schedule actually works, how these loans actually work is not covered in their classes, and they're not tested on it, and they don't have to know to get a license to sell mortgages. Is that what you're telling me?
Mortgages is like, that's why I said that some people are going to disagree, which is fine, right?
Yeah.
Tomorrow, you can go take a class, pass that test, and Don, you can start selling loans.
Wow.
Just like selling a product.
So if you are a consumer, you can now talk with your real estate agent and your loan officer, and you can go in educated, and then they have a product that you need, but you're going to design your own product and tell them, this is what I want, this is how I want it, and then they can then give it to you. Is that what you're trying to tell me today?
That's what we did with D. Monet.
Lord have mercy.
We had the formula. We went to the bank. I said, I want her to have this product right here. I want the seller to cover the closing costs. I gave them the formula for them to follow. not for them to give me the formula to follow their formula.
Wow. We'll have some other people on stage right now. I want to see who they are. If they're followers, if they're in the business with you, or if they have questions. But I don't know these people, but maybe you do. We got Anna Munoz. How are you doing?
Hi, hello, Don. I'm doing great. Thank you for asking. How are you doing yourself?
I am doing excellent. Thank you very much. And what is it that you're bringing to the stage today? Do you know this guy, Jerome?
Oh, I do. I actually work with him.
So you work with him. So you listen. Can I ask you a question?
Yes, of course.
Okay, because he's not on camera right now. Maybe he can't hear us. Is what he's going to tell us and what he's been telling us, is it actually true?
You won't believe it, but yes.
Oh my gosh, I can't wait. I can't wait to get. And we got, was it Franz Vincent? Franz Vincent?
Yeah, Franz Vincent.
Hello, Franz. How are you doing?
I'm doing good. How are you?
I'm doing well. Thank you very much. And so why do you come to the stage today?
I actually work with Jerome, and he was the one that introduced me to zero down payment to purchase, my next 3 properties.
Franz, come on, man. So when you first heard it, what did you think?
I thought it was crazy because my wife and I bought our first 2 houses with 3.5% down with FHA and then 5% down with conventional, right? And I've always been taught that you have to put a lot of money down. You need to save a lot of money to purchase a home.
Mm-hmm.
But then when I met Jerome, it was a game changer, right?
Wow.
Why would I tie my money on a liability when I can use that to buy more investments?
Wow. Okay. All right, folks. I know you've been waiting. So Jerome, you wouldn't happen to have some case studies where you've actually done something like this to show the people exactly how this comes about. Okay. Do you have anything like that?
I have plenty of case studies. I have file cases of case studies. I do. So where do you want me to start, Don?
Listen, man, I listen. We got people out there right now that are thinking just like Franz was thinking. I got 3% down. I got 5% down. I got 10% down. Some people even have 20% down, and they're told that's the best way to go. Do you have something where you can show us how a person, had a certain amount to put down, but then they found out they didn't have to? Oh my gosh.
Correct.
Let's see. Let's see some of that.
Okay.
I'm excited. I'm excited to see it. All right. If you go ahead, man.
While I set the screen, I want you to ask Franz, how many houses has he bought with zero down payment?
I'm afraid to ask because I think I might fall off my chair. Okay, I'm afraid to ask him, but I'm gonna ask him anyway while you're getting set up. Franz, how many houses have you bought zero down payment?
I have bought 3 houses with zero down payment, and I stayed in this houses 8 months to a year. It's that easy.
The crowd is going wild, Franz. The crowd's going wild, man. No 3 houses, no down payment.
Yes, sir.
Oh my gosh. Okay, listen, man. Listen, I'm on the edge of my seat, Jerome. People are listen, they're lining up, they're sharing this with their people. We got people right in here and right now. They got eyeballs on the screen. They want to see what you have got, and they want to see if they can get it too. And listen, folks, we're going to tell you how you can get a hold of Jerome here too. All right, so don't we're not going to keep that secret. Okay, Jerome, you're on. Tell us how it's done, man. What are you doing for the people?
Okay, so what I'm doing for the people, most people that come in, they think they got to put 3% or 10% down. In this case, this person was going to put 10% down.
Okay.
Purchase price of the house is $582,000, $594. Let's just keep it simple, right?
Okay, right.
There's something called closing costs. We got that paid by the seller. If you look down at the bottom, cash to close was 0.
Oh, wait a minute. Okay. Okay. I'm already sweating. So you're saying not only did they get no down payment, but the seller paid the closing costs. So they moved in with, is that zero out of pocket?
They moved in with zero. So they paid for their inspection fee. Let's say
Okay.
it's $500. They paid for their appraisal fee. Let's say it's $600, right?
Okay.
And they ended up getting their earnest money back.
So
So the total cost out of pocket was under $3,000 on almost a $600,000 house.
oh my goodness. So what would their down payment, what would it have been?
They were going to put 10% down, so that was $57,000. That was $58,000 around. That's what they were going to come out of pocket just for down payment was $58,000.
Okay.
So
All
Don,
right.
the question is, what would you have done?
Okay, wait a minute. Demonet is here. She is here. She only has about 7 minutes. We got to bring her on to tell her story. Demonet, will you please tell your story?
All right. Hey guys, I'm Demonet and I am married and I've got 4 kids under 6. And I literally called Jerome up and I'm like, look, we need a house. Like we were homeless and we're like, what are we going to do? We need a house. And we transitioned from Texas to Florida. So with that transition, you're trying to find out what you're going to do. So anyway, in 30 days, y'all, kid me not, 30 days, this past February, like 30 days from February 1st to February 29th, like not even 30 days, 29 days, literally. Jerome walked us through the steps. We went with our realtor, everything got done, and literally zero down payment. I think I left paying only like $185 for appraisal. That's it.
$185.
That's it. 4-bedroom, 2-bath home.
Demonet.
What's up?
Demonet, I got to ask you. How did you find out about Mr. Pemberton? How did you find out about him?
Honestly, God. My dad actually, his name is Silas King.
Mm-hmm.
He passed away about 3 years ago. About 3 years ago.
Yes.
And Jerome was my dad's friend.
Wow. So you found out about it just like that.
Yeah, because I was helping my dad with his credit,
Mm-hmm.
and he was planning on getting a house. He had just made 700 credit score, and he was going to meet with Jerome.
Yeah.
Jerome was telling him he didn't have to do all that, but you know how some people,
they hear about it. This is what they've been hearing for years, and they're thinking it has to be done this way. But you're telling them you are a perfect example of how it can be done differently.
Amen.
Lord have mercy. Folks, are you hearing that? Listen, if you all don't come in here and start asking some questions, or at least putting them in the chat, you're missing an opportunity of a lifetime. He's been doing, listen, I haven't heard about something he's been doing for 25 years. I have not heard of something he's been doing for 25 years. Okay. Now I'm an expert in my area. I'm not an expert in his. All right. So Demonet, before you go, before you go, is there anything else you'd like to say about your situation that most people would need to know so they could get their house at no down payment?
I think the main thing is to stay focused, be consistent, and listen. Like if they're telling you to do something, do it, and don't delay. No procrastination. If you want to see progress, you got to get it done.
Wow. Yes, sir.
You asked Demonet what was her total cost out of pocket.
What was your total cost out of pocket? Because I'm gonna ask you.
What was it? 185.
18,500.
No, $185.
$185 out of pocket.
Out of pocket.
And moved into a what kind of house?
A 4-bedroom, 2-bath.
Lord have mercy.
And all the appliances were there. So I got my refrigerator, I got my stove, I got my washer and dryer, like all in there, included.
And you're making that mortgage payment right now and doing your thing. And it's just like any other house, any other mortgage, except you had $185 out of pocket.
That's it. All we do is say, okay, God, if that's, hey, I'm going to stand in position. Okay.
So Demonet.
Yes.
Now tell everybody in Florida how much it would cost your family to rent to get a place in Florida? Because I didn't know this. Explain it to everybody.
So if you want a place in Florida, you have to pay a deposit fee of the first month's rent, and that's $2,800. And then this for a 3-bedroom because we have 4 kids. So 3-bedroom, $2,800 is the deposit, and then you pay $2,800 for the first month. So coming out of pocket, I would have had to pay, what's that? 28 plus 28, 50. What's that? 56, right? I think that's what it was, 5,600, just to get into the place. And so a lot of people here actually are homeless.
Wow. So you're saying it costs less to move into a house than it does to move into an apartment.
Yes.
Oh. I'm sorry. I'm laughing, folks, but I don't know. I don't know what else to do. I don't know how else to feel right now.
Yeah. People don't know it though. So that's why they're still just walking around, just kind of wandering because they don't know the secret. It's not a secret, but they don't know it.
Wow.
You got to communicate with others, like to get what you need, to learn, to grow.
And so you went out in faith.
Yeah.
All right. You heard that this can be done, and you went out in faith and said, and you found out, yes, it can be done.
Yes.
And let me tell you, have you told anybody else?
Oh yeah.
Do they believe you?
No. You got to show them the papers. Look, let me show you the evidence. But actually, because of, I think they do believe me because, some of them. Let's say some of them. And the main reason is because, God had me do this.
Yeah.
Which is a goal. I made my goal that we would get this house.
Mm-hmm.
And I sent it out February 1st. The day we went and looked at it.
So you made sort of a vision board. You made a sort of a vision board about that house.
Yes. And then they were like, that fast? Wait, what?
Okay.
And I'm paying off debt right now. So they know I'm paying off debt. So they're like, wait, what?
And they know your situation.
Yep. We paid off $60,000 in debt. So they knew I didn't have the money. They knew it. So some did believe that, knew my story.
Yeah.
So Don, she has no idea with your acceleration. This is a surprise to her. I'm gonna pay for her consultation so you can pay her house off in a very short period of time.
Wow. So Demonia. So
you don't know.
You don't know that most of our clients pay off their brand new mortgages in about 7 years.
I keep seeing that pop up, but I was like, wait, what?
With their current budget.
Okay.
In about 7 years, and you can have a great lifestyle while you're doing it. You don't have to eat beans and rice every day. Now, I like beans and rice, but not every day.
Wow.
Okay. You don't have to drive a 30-year-old car. You don't have to sell pizzas at night. You don't even have to cut up your credit cards. We're going to show you how to use your money more effectively so you pay 75% less interest. I hope to get a chance to go over a little bit of this, but thank you so much, Demonia, for being here today.
Yes. Thank you guys for having me.
And hang on as long as you can. Do you have something else to say before we let Jerome have the stage?
Nope. Be consistent. Listen to your agent, and you will see success.
All right, Jerome, stage is yours. Tell us what's going on and what what can people look forward to?
The biggest thing is like what everybody's saying is that there are loan products out there that you do not have to put a down payment. The calls we get, Don, from people, we get about 4,000 calls in a year.
Yeah.
We hear stories, crazy stories every day. And what we found out, Don, is that people, because there's so many products out there, there's so many people out there talking about loans and mortgages and real estate and things like that. I think most people out here are getting confused. So there's a client that was buying a house. They were going to put $300,000. I'm just going to give you examples. $300,000 house.
Right.
3.5% down. They would have to put $10,500 down.
Okay.
We ain't even talk about closing costs. Add a closing cost on top of that, it's another $10,500. So a lot of people may come up with the down payment, right? But there's other costs, right, that we have to factor in before we put an offer in on the house to make sure that person is going to be able to close on their house. So what we did was we made sure that we found a product, right, that will cover that 10,500. There's a strategy for that. Either we're going to get the seller to pay it, right, or we're going to use some type of other strategy to make sure that closing cost gets done. And so that client doesn't have to use that 10,500. We're going to find a program, or some people call a mortgage product, so they don't have to put that amount of money down, so they can keep that money and do other things with it, like maybe moving, maybe furniture, maybe just have it just a kid, a rainy day. Those things is what we talk about in details. So a lot of people get scared, Don, is because when they talk to somebody, like you said earlier, if somebody thinks and they believe they got to put 10% down on a $300,000 house, forget about the 3.5%. That's $30,000.
That's right. That's right.
That's what somebody believes, that they got to put 10% down. There's people out there that believe that. So that's the reason why they stay a renter, is because of what they believe.
Oh, wow, wow, wow.
It's what we were taught. It's what we were ingrained, that you had to have this money, right?
Yes.
And we know the average income out there in America. We know what people have in savings. So that's why during this time when people get their tax returns, all the vultures go after them, because they have people they know they're getting that money. So they can take that money so they can put it down at this season right now.
Ladies and gentlemen, let me tell you something. You do not want your loan officer to educate you on how this process works. You do not want your real estate agent to give you lessons on how money works. That's not what they do. The real estate agent helps you to make sure to avoid landmines when you are buying the house. Okay? That's what they do. Okay? And that's what you want them to do. You want them to make that process of buying the house as seamless as possible. Okay? But you don't want financial advice from the real estate agent, because that's not what they do. You don't want your mortgage professional to give you lessons on how mortgages actually work. They make sure that the money is there for you when you're ready to get it, so that you can buy the house. But how the thing works is not their expertise. I'm telling you, you want to go in with this education and let the realtor do what realtors do, and mortgage professionals do what mortgage professionals do. But their job is not to educate you on the mortgage product. Correct?
Correct. You said it straight to the point, that people are going to people that do not understand money, Don. But this show is about, what I'm excited about, is that this show is about to get the belief for most people, right? It's to get you to believe, because it sounds crazy what we're talking about. It does sound crazy, but I want to make sure we understand that in this case right here, this case study, this person was going to
put it on the screen. Put it on the screen.
Oh, it's not on the screen?
Yeah, it's on the screen. Yeah, we got it.
It's on the screen.
Yeah.
This person bought a house for $289,000, 500, right?
Yeah.
They put a deposit down of $3,100. I'm keep it simple. We got a seller credit. They literally moved in this house for around $4,000 total cost out of pocket, guys.
All right, so I'm going to put the numbers on my screen so we can use that later. So, what was the purchase price of the house again?
The purchase price on this house was $289,000, 500. That's the sales price.
$289,500. All right, and normally they would have had to put what, 3.5% down or 10% down?
In this case, this client was going to put 10% down.
10% down. That's all I needed. About 10% down on this one. Interest rate?
Interest rate on this one, I don't know. Let's just use 6.5% on this one, because I didn't want.
Okay, 6.5. 6.5. Okay, so we've got that set up. So they didn't have to put 10% down on this.
They did not.
Which would have been what? $28,000.
Right.
Okay. Wow. $29,000. That's a lot of money.
$29,000.
Almost $29,000. Okay, so so they didn't have to do that. Okay, and now they have a closing costs, right? So what happened with the closing costs?
We got it covered by the seller to pay the closing costs. There's a seller credit for $6,750.
Mm-hmm.
And
Okay.
you know what?
What?
This person got a partial refund of their earnest money back. So it was
Okay.
less than $3,000. They got
Okay.
a part of their earnest money back of $2,743.80.
So they put earnest money down of how much?
They put earnest money down of $3,100.
Okay. All right.
At
Now,
closing,
yep.
they got part of their earnest money back of $2,743.80.
What kind of magic are you doing to get the doggone earnest money back?
It's so, Don, I don't want to make it too complicated. I really don't. So this is how I look at it. If you could buy an apartment building,
Yeah,
and you raising capital, right,
Mhm.
and using other people's money, and you can move in with very little money, buy an apartment building or a hotel.
yeah.
Home is easy. As long as you understand the formula, what you need to get to make this work, it's not that complicated. It really isn't. Don, there are programs out there. I don't even know if I should talk about this right now, where the bank will give you all of the money. I'm talking about the down. I mean, there's no down payment requirement, but they will each actually lend you the money for closing costs. That'll mess somebody. I don't think people can handle what we're talking about right now. But if I
Wow.
tell you we get people approved for a bank where they would give you all of the money, Don, I'm saying all of the money.
Okay. So you can get all of the money, and they will lend you that money,
They will lend you it.
and then we could, and then like they'll roll it into the mortgage.
It's in your mortgage.
Okay, and then when they come to the P.I.L.L method, we can show them how they could use that money to save tons of interest on their mortgage. I can't wait to get to that part. Okay, so listen,
I'm trying to stay in my seat, Don. I'm trying to stay
all
in my
of,
seat.
and listen, I'm writing it down. The bank will send them all of the money. What else you got to tell me?
Money.
Okay, now wait a second. I'm not seeing it in here yet, but I know somebody out there is watching us. All right, they're asking about PMI, private mortgage insurance.
Right.
What can you tell us about that? And folks, listen, you need to click on that link, copy the link, put it into your browser, okay, and come on stage and ask your questions today. You don't have to be on camera, but you can be on video. But at the very least, put your questions in the comment section. If you are on let's see, Twitter, all right, I can't see your question. So come on YouTube or Facebook, and we can see your questions if you put it in there. Okay. Excellent. So go ahead, man. Talk to us. So what about PMI? Can we get that handled too?
Right. So one of the things, PMI, which is mortgage insurance, what I don't want people to, questions are great. When somebody is lending money, always remember that there's some type of insurance. A bank's going to have insurance. So people talk about PMI. And for years, we always said that PMI is bad. PMI is just insurance. And so when somebody's lending you money, right, they're the ones, the banks are the ones that setting the terms. So so you're paying insurance to borrow the money. I think people get too trapped up and, does it have no PMI if it has mortgage insurance, or if it does not have mortgage insurance? It's just in the numbers, guys. It's just in the numbers. The bottom line is that we're borrowing money. And then with the P.I.L.L method, Don is going to have that loan wiped out in this methodology of how he does what he does. He's an expert at that. And so I think we focus on the wrong things. And so some people, when they say mortgage insurance, they're talking about that's an added cost in my mortgage payment is what they're talking about. It's just insurance.
Okay, so here's what I'm hearing. Okay, we're like Demonier. All right, I can get a 4-bedroom house. I can do this. I can do and put my family in a house cheaper. In a house cheaper than I can move in to a rental. And what you're telling people is, don't focus on on the tree of the PMI
Right.
and miss the whole forest of moving into a house cheaper than I can rent it.
Look, I mean, if you want to be a homeowner and you're going to borrow, right?
Right.
Then borrow the money. You're borrowing the money. Part of those conditions of borrowing the money is the conditions to borrow the money.
Okay.
It's just the conditions, right? And
All
so
right.
if you're looking for a product that has no mortgage insurance, we'll find your product does not have no mortgage insurance. It's still going to come down to a payment.
Right.
So some products have mortgage insurance, some don't. A lot of the products that we're talking about where a person doesn't have to put a down payment down, then it's not a mortgage insurance. It might be in the rate, but there's insurance on that loan.
Okay, so however it's there, it's there. So we can get them into the house, all right? No down payment, and we can there is a possibility of maybe getting some of the earnest money back because you've done that before, okay? And we can get in there and have the seller pay the closing costs, all right? And we have no down payment, but you don't want people to get hung up on the PMI. We can get all this other stuff done. And if this particular product has PMI, don't walk away from the deal. You've already saved thousands of dollars, tens of thousands.
And you're going to help them pay it off quickly.
Yes. Okay. Now, give us a few more examples of how you have helped other clients pay off their, get into the home with zero down payment, and how you've handled other things like closing costs and things like that. So I'm sitting on the edge of my seat to see some other examples.
So other examples, let's find you. Can I tell you about somebody we're working with right now is buying $1 million house?
Okay, Demonier just sent me a message, says she got her earnest money back.
She did. She got a check back.
Lord, listen, are you saying I can move into a house and I get a check at closing? Oh my gosh, this is just too much for me today.
Right. And so it's in our community, right?
Yeah.
It's our reality. We deal with this on a daily basis, right? But in most people's community, when I say community, I mean throughout the United States,
right?
It's not common, right? So one of the things, because we got people all across America.
Yeah.
Here's the thing. This is just this one strategy. In certain places in the United States, the seller's not going to pay their closing costs because of the conditions of where they are.
Wow.
Right? So it depends of where you are and what strategy that is going to be put in place for you to win. So
there are different strategies. Okay, tell us about this person you have on the screen.
Okay, this person right here bought sales price of the house is $325,888. That's
okay, $325,888.
Yes, sir.
Okay, all right.
Yes, sir. They put a deposit or earnest money down of $3,262.
$3,262. Okay.
Right. And we got a seller credit of $3,548.93.
Seller credit. What does that mean?
I mean, I got the seller to contribute to pay towards their closing costs.
So seller gave how much?
Of $3,548.93.
So that cancels out their earnest money.
Well, that was just going towards their closing costs, but they did on line 5, they did get their earnest refunded back to them of $3,262.
Oh, how does that work? How do you get the earnest money credited back? How does that work?
I'm glad you're asking that question. It's just a mathematical equation. So when you don't have to focus on, I'm putting down payment down, right?
Yeah.
So we don't have to talk about that no more. That person that loan is not requiring them to put a down payment down. Then we just focus on how are we going to get the closing costs paid? How? Right? And so when we have enough credits to pay all of the closing costs, that person can get their earnest money back.
Okay.
So those credits going towards that closing cost. So everything, all the bills have been paid so they can get their earnest money back.
Wow.
So we specifically know what the cost of closing cost is before we enter into the transaction. So I know exactly what I need to do, or Franz or anybody else on the team. We know what we're going for. We know what we need to negotiate. We know what needs to be covered so that client can keep majority of their money.
All right. So this one is, we have one where a person had 289,500 to move in, no down payment. This one was 325,888, no down payment to
Correct.
move in. All right. Where they would have had to put like 10% down on normally. Okay. That is a massive amount, over $30,000 they would have to come up with,
Right.
that they didn't have to come up with.
Right. And there's products out there where and I don't want to make it complicated like you were saying earlier. We know you could put 3.5% down on an FHA loan, right?
Right.
But what the concept what we're talking about today is that you don't have to put a down payment down unless you want to. Now, Don, you're the master of that, why people shouldn't have to do it.
Yeah.
We're going to get to that later. But right now, we just want to talk about, you can keep your money if you want to. Yes, we have to get you ready for the bank. We didn't even talk about, Don, one of the biggest issues besides income.
Right.
Credit. Because I know we got the credit goddess on here. I have other people that are master. We call them surgeons of credit.
Right.
One of the biggest things that I see with people really don't understand what you can do when you have great credit, because the banks, they are more lenient because you have good credit. And Don, I don't know how much time you want to spend on that. If somebody says that they have low credit scores, they should spend their money and get with an expert to increase those scores so they can have more access to money.
Okay. And so what you're talking about is getting approved for a loan.
Yes, sir.
Okay.
Yes, sir.
So with the P.I.L.L method, I don't care about interest rate.
Correct.
I care about interest cost. In fact, I don't even care about high interest rates, because I can make those work like and get an effective interest rate of around 1%. So we'll show you how to handle that. All right.
Correct.
If you can afford the payment, we'll show you how to pay a lot less interest. I don't care what the interest rate is. So let's just get you approved for the loan. Okay. That's the focus now. Get approved for the loan. Let us help you handle the interest rate by cutting your interest cost on the loan, how much you're actually paying for the loan. What do you have on the screen now for me?
Okay, so this one right here, remember I was telling you earlier,
Yeah.
when you have the appropriate credit score,
Mm-hmm.
the bank is going to give you all of the money for the purchase price, and you can finance the closing costs. So we call that a 103 loan, 105 loan. Now, I know people are going to be saying, well, I don't know where to get that at, and things like that.
Okay.
That's fine, but I'm going to show you how this works.
Well, we got some questions first. And then we'll get into this next example. Okay. All right.
Fine.
So Rose was, Brenda is saying, what credit score is needed? What credit score are your clients? Is there an average? Is there something that's needed? Talk to us about what credit score your clients have to get into a house.
Okay. So I'm going to keep this general.
Yes. Keep it general. We
have products that we help clients get into with a credit score as low as 600, where they don't have to put a down payment down. 600.
Wow.
And I don't get too deep, but it has to. That's for an FHA loan. FHA loan, which there are grants that will cover the down payment, and there's no restriction on your income or area that you live in.
Wow.
Now, we don't want to enter in there with a 600. Let's be clear.
Yeah.
It's easier to get your score up if you're dealing with the right people, so you can go in there and you can qualify for more programs. So 600, I don't always like to go with the minimum. Right. I'm like, let's maximize your potential power by getting your score up so you can qualify for more programs and not be singled down to one program. So
I got Rose here. She's saying no banks are not, because I guess she's commenting on something that was said before. Her score was 829 and no help. Rose, what do you mean by that? So if you can come online, you can come on the show and talk to us about that, or you can type it in there. But do you see where people have high credit scores and it doesn't make them any more eligible? Have you seen people with high credit scores turned down?
Yes. And so credit scores is one requirement.
Right. Well, just one.
Of the formula to get approved, right? Credit score is one thing. We don't have time to talk about how the bank looks at you on paper. We do that internally because you might not have enough income or you might not show enough income, even though you make the income, but you don't have verified documents to show that you make income.
So Jerome, let me ask you this. A boxing trainer, will get their fighter in shape before the fight. Okay.
Yes.
So are you telling me that if somebody comes to you, you're going to make sure that do everything in your power to make them eligible, look good at the bank? Yep. So we're going to put everything in place before you get, so you're going to train them up like a coach trains a boxer. So when they enter that ring to get that mortgage, they're most likely to win. Is that what you're telling me?
That's what I'm saying.
You do all of that for your clients.
You hit it right on the head. Why go into the bank not knowing, right? Not knowing how you look on paper before you go to the bank.
Wow.
That's folks, why most people fail. They was like, I've been trying for the last 10 years. I'm like, yeah, because you never sat down with somebody to look at your situation. Credit score is just one aspect of the formula. One aspect. Then there's income. So you could bring in all this cash, you know what I mean? And it's not documented at the bank. There's programs for that, right? Where you have to put a down payment down. We have self-employed people come to us all the time. I was like, man, they want you to put $75,000 down because you ain't got your papers right.
Wow.
Let's get your papers right so you don't have to put $75,000 down. Put that back in the business, go make more money with your money.
Wow. So listen, how do people, before you go to your next example, how do people get a hold of you?
You can reach me on the cell, 281.
Wait a minute. You give out your set? Lord have mercy.
I mean, we do have a team, but I for your show, I'm gonna let them have access to me, and then they're gonna set up an appointment with Mark, Anna, Danette, Franz, or somebody, right?
Okay.
But I'm gonna give up my cell. I'm doing this for you, Don. I really appreciate everything you've done. You've changed my business because we've had so many clients that understand money. I didn't have a reputable company that I could send them to get rid of this debt. And I've known about you since 2016. My wife called me and she was like, hey, you need to call Don back. We called Don at the beginning when we started putting this program together. Yeah. And he was like, you got to partner with Don because Don knows these numbers. He understands this stuff. We were focused. We were the experts in our arena, right? Don, you're the expert in your arena to get rid of this debt, right? It's just a decision. If you want to borrow the money, and you want to go to Don and get rid of this debt, and you got investment properties, you want to get rid of debt, Don is the expert. He's the surgeon in this arena and in this space in the United States.
All right, well, let's talk about this before we got this comment here, okay? It says, I don't have mortgage papers. They refused to give me a 15-year loan, paid all closing costs plus 3.5 down, interest 7%, but I did the P.I.L.L method and paid off first 3 years by adding up principal payments. Oh my goodness. We're going to show you how all of that works, ladies and gentlemen, how to save that money. So here's the other thing. Don't ever, okay? Some people come to me, after the fact, but if you come to me before the fact, don't ever get a 15-year loan, ever. Always get a 30. And we'll help you to pay it off on average to 7 to 9 years. There's no need to put all that extra stress in getting a 15-year loan. Okay, get a 30. You don't need a permission to get a 15-year loan. Maybe we'll be able to show you that. But we're going to get it. Show us another example. We've been here for 49 minutes. Show us another example of how you're helping people get into these houses. I mean, like Demonier. All right, she was totally trusting the Lord on this one, and she prayed you up, and you came in and got that thing done for her. What else are you doing for these folks? Show us this other example.
Here's another example. Sales price of this house is $269,000.
Yeah.
They put a deposit down or earnest money of $2,990.
Okay, let me write the notes down. 200 and how much was the mortgage?
$2,990.
Okay. All right. And the sales price?
Sales price is $269,000.
269,000. Okay. All right, go ahead. Keep going.
And you see at the bottom it says cash to close to borrower. They ended up getting back at closing a check for $3,410.71.
Okay, wait a second now. Just say that number one more time. 3,000.
They ended up getting a check back for $3,410.71.
Okay, so what you're saying, where it says cash to closing, and some people know what that means, cash that they had to bring to closing, instead of cash to closing, they get money back.
Most people, if you call a title company where you close or your attorney today.
Sorry, the crowd's going wild, man. Sorry. Go ahead.
They should go wild. Most people bring money to closing.
Yes.
These people got a check at closing.
Listen, I've been doing what I've been doing for years, and I brought money to closing. Come on. Where were you when I was moving in? Come on, man. Keep going.
So I want people this is that loan, that 103 loan. You can borrow all your closing costs. You got to put a down payment down, and people choose products like this. This one right here, the purchase price was $462,000, 493. 462, 493.
462, 493. Okay.
Make it simple. You see cash to close. Minus means they ended up getting $1,169.29 back at closing.
Wow. Wow. Listen, this stuff is great. Listen, so what you're doing here, you're changing the game. You're changing the game on the services that you provide. All right. And listen, folks, I need you all to focus in right here, right now. The services that this company provides, it comes, there's a price and there's a cost. I need you to know the difference between price and cost. Okay. I'm telling you right now, the cost to you for his services is zero. There may be there's a price on it, but if your benefit outweighs the cost, there is no cost. Are you hearing me? If there's a cost, that's a tiny fraction of the money that you did not have to put down and money saved. It is going to be worth whatever they have to do to get you into that house and make sure you don't have to pay all of that money. And the money that you would have paid, a very small percentage goes to this company. You keep the rest. Oh my goodness, they're changing the game. I mean, if I don't have to pay $30,000, if I don't have to pay $46,000 to move into this house, if I don't have to pay $26,900 to move into the house, if I don't have to pay $32,580 to move into the house, oh my gosh, that is a game changer. Okay. So Rose wants to know, what about the real estate agent's commission? That doesn't even enter into this, does it?
No, it doesn't enter, because when we decide to take a person on as a client, right, the seller is the one that's paying our commission. That's not coming out of the buyer's pocket. So the problem is, Don, and we've talked about this, is people can't. They're like, "Are you a loan officer?" I was like, "No, I understand how money works. I understand how to strategically help families buy a house with very little money out of pocket."
Yeah.
And we perfected that over the years. We perfected that, right? It doesn't matter where you are in the country, right? So a lot of people get it confused because they say, well, a realtor is not supposed to do that. Don, that's why people get it confused. They're like, a realtor is not supposed to do that. That's not your role.
Right.
That's not your role.
Mm-hmm.
So that's why people are getting confused, because let's talk about the commission.
Yeah, let's talk about it.
Let's talk about it. I'm adding a service that I don't have to add, but my added value to you, right? Besides making sure in the transaction that you're covered, make sure everything that's in that contract that's going to be there, right? We said, let's be a specialty in this. Let's be a specialty in over all these years of helping families move in the house with very little money out of pocket. Now, even though I showed this to people, they had options, but people still put money down, guys. They still put money down.
Right. Okay. Now we're going to show you. We're going to show you in a minute, folks, why if you have the ability, if you have that cash available, don't use it for a down payment. Don't use it as a down payment. I'm going to show you how to use that money differently in just a few minutes. So, folks, listen, we're going to take a quick break. And we got people ready to talk about this. We've got Jerome. He's ready to continue to break this down. But we're going to take a quick break. We're going to hear from Dr. Eric Thomas, he's the number one motivational speaker in the entire world. He commands up to $150,000 an hour to speak to corporations. Let's see what he had to say about the P.I.L.L method and how he helped his wife feel a whole lot better about a situation where even when he's making that kind of money, there's still some security issues he had to solve for his wife. Let's take a listen.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
All right, folks, listen, you want to go to ice10k.com, ice10k.com, and this is what will appear on your screen when you go to ice10k.com. You'll see a picture, you'll see a video with Dr. Eric Thomas. You'll see the exact same video. There are three other videos there, but when you scroll down underneath his picture, you'll see get a savings and earnings report. Okay, when you click on this, it'll say get your free savings report. What is the savings report? You fill out it's in two sections. Fill this out, and you can know the month, day, and year you could be debt free on all of your debt, not just the mortgage, but everything you owe. The average family has 13 different debts. The average family has 13 different debts. One more time, the average family has 13 different debts, and all of it, we show you how to pay 75% less interest so you could be out of debt in an average of 7 to 9 years on all of it. Why not get a savings and earnings report and see how this can work for you? It's free. There's no reason not to get a savings and earnings report today. Fill it out. All right. Get a free savings and earnings report and know the month, day, and year you can be debt free and how much interest you could save. And on average, we save people $150,000 or more in interest. They never have to pay the bank. On top of, now this is a perfect marriage. On top of no down payment on the mortgage itself. Lord have mercy. Do you have another example for us? And then we'll talk about my book later. And thank you so much for mentioning my book. And we're going to put that up on the screen a little bit later. But right now, Jerome, the people are here. If you have another example of how you're able to help people. And we want to also get at least one or two examples from Franz and Anna. So what do you got for us? Because I want to hear some more stories.
Okay, so this sales price is a new home build.
Yeah. New home.
New homes.
Yep.
This works on new homes. It works on resale homes.
Yeah.
$462,000, $493.
Yeah. This is a new home build.
New home, right?
Okay.
They put $1,000 earnest money deposit.
Mm-hmm.
We got from the builder a seller credit of $5,000.
Right.
And the client ended up getting back at closing a check for $1,169.29.
Okay, so I'm confused. So how much out of pocket here? So
okay, less than $1,000 was for the inspection.
Right.
They got the house inspected, and
right.
then they paid their appraisal fee. That was it. $1,000 out of pocket, total out of pocket for $462,000, $493.
Right.
For a house.
Oh my gosh.
For a house.
This is amazing. Listen, I thought the P.I.L.L method was off the chain. Listen, oh my God, I'm more excited about this than I am about my own program. So listen, Anna, do you have any stories to tell about how you're helping clients?
Hi. Yes. Well, we right now have a couple clients that we are helping. They already got approved. They're looking for houses. And we had one client that she had everything resolved. But the issue, well, not the issue, but the emotional part was when she had to decide for a house.
Right.
So she had many options. Another difficult part was which house I want, because it was something that people don't believe. They don't think it's possible. And when they have it in front of them in their hands, it's like, wow. Like that little shock comes of like, wow, it's so easy. I can really move into it with no money, like no money out of pocket. Like it just shocks. And that's something amazing to see that they don't believe it. And when they have it, it's a little like, wow.
Listen, I got a question for you. You wouldn't happen to be bilingual, would you?
Yes, I am actually the director of the Latin department.
You're the director of the Latin department.
Yes.
Okay, mi esposa habla español muy bien.
Oh, perfecto. Tu español es muy bueno, de hecho.
Well, see, that's as far as I go. Okay, but it's my wife that speaks Spanish. I don't. But you know, it's kind of funny. So when we go visit her family, and then they speak Spanish to me, and then they start talking fast, and I can't understand it, and I say no entiendo, and then they start laughing, just like you're laughing now.
No, but your Spanish is actually really good. I thought you were able to establish a conversation because your accent and everything is really good.
Well,
you're
my wife
learning fast.
Well, thank you so much, Miss Andy. But you're helping people who speak English and Spanish. You're doing that as well? Correct.
Unfortunately, the Latin and Hispanic department has always been left behind within all the process. There's not much people to help them out, to put that interest, either because of the language, a barrier, or just it's not that of a market to attack. But there's so many Hispanic. There's so many, and they're not being attended. They're not being taken care of. They're not being talked to or guided. And it's just, it's time for them to have a spot in the main page and to start getting that help.
Wow. So did you hear that, folks? Listen, you got somebody that's on your side. If your first language is Spanish, you have somebody that can help you to understand the process and get through it flawlessly and save you a lot of money. All right. So, Andy, thank you so much. Franz, do you have a story to tell us about how you're helping your clients?
Yeah, I do. Actually, my closing last week, he bought a $400,000.
Let's bring him up on the screen total. Okay, let's go ahead. Go ahead, Franz.
Yeah, so I actually have a closing last week where he bought a $400,000 home, and he did a 105% financing loan, right? Where and then he got a $8,000 seller contribution. So he actually got his earnest money back of $4,000, and basically he did not pay for anything because the seller paid for all the other items.
Wow.
Right.
Wow.
So,
Wow.
but yeah, and my like the 3 houses that I bought, like all of that, I got all my earnest money back. My current home that I bought for $569,000, I only paid $750 for it out of pocket.
Okay.
So,
$750.
$750 for a $569,000 home.
Because see, listen, I'm used to hearing numbers. When you talk about 750, I'm talking 7,500 or $70,000. I'm not talking about $750 to move into a house that is less than what I have to pay to move it into an apartment, ladies and gentlemen. I can't move into an apartment with $750. Wow. 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 Listen, folks, let me tell you something here. We're going to jump into something here. We're going to use this $462,000 example. And we're going to bring everybody up on the screen. I need to hear input from everybody on this. All right. And so we're going to take a look at these numbers. Okay. We have $462,000. Okay. I need you to help me, everybody. 462,000. It's a 30-year loan, correct?
Yes.
And do you have the interest rate there?
Let's just use 6.5% again.
6.5%. Okay. All right. And here is the principal and interest payment on this loan. Now, let me show you in real numbers on the screen what this person did not have to put down. So I'm going to put a calculator up on the screen. You guys see my calculator here? Okay.
Yes.
So if it's $462,000, and they didn't put the 10% down that would normally put down. So we're going to multiply this by 10%. Okay. Equals $46,200. Anybody else that's not working with you, if they have a conventional loan, they have to have at least $46,200 to move into this house. Okay. Now, talk to us about this. Help me to understand seasoning. How long do they have to have this money in the bank account even before they move in? If they're using somebody else? Jerome.
Usually it's 60 days that money has to be sitting in there.
So I have to have $46,000 sitting in a bank account for at least 60 days before I can use that money to even put it down if I'm not using you guys. Lord have mercy. Okay, so you're going to save them that money, $46,200. Now, let me show you something here, ladies and gentlemen, that if I don't have to do that, here's what we're looking at. You're looking at a loan situation where $462,000 is being borrowed. Here's what the bank wants. They want $589,254 interest on that loan for 30 years. That's what they want. And guess what? 9 out of 10 people will never pay off a mortgage.
Right.
9 out of 10 people that I'm not talking about across the nation. I'm talking about people that you know. How many people do you know that had a mortgage and actually paid it off? It'll be less than 10% of the people you know. So that means for 90% of us, we're going to pay every single dime of interest that the bank is looking for and then some. And then we still won't pay it off. We'll die with this thing. Are you hearing me? Okay. So that means they're going to pay more in interest than they borrowed in principal. And the total cost of that house is now not $462,000, but $1,051,254. Who wants to pay $1 million for their $462,000 house? Anybody out there? Raise your hand. I want to pay $1 million for my $462,000 house. Nobody. Okay. So here's where we are. When you get your paperwork, 3 days before closing, here's what's going to show you. This is what's going to be shown to you in your disclosures, not just your interest rate, but the tip. The tip is called total total interest paid as a percentage of principal. They had to start showing this in big, bold numbers as of 2015. Here we go. That interest rate really means 127.544%. So all of you folks that deal with these mortgages, does this number actually appear, the tip actually appear on those mortgage papers now? Anya, does it appear? Anna? Franz?
Yes.
Yeah,
Yeah, it
sorry,
does
I
appear
was
on
trying
there.
to unmute myself. Yes.
Okay, so it does appear. So it's there now. So people can actually see what's going on. So what can we do about that? So not only can we move in and not pay interest, we're going to show you what you can do. Let me get rid of some of this advertising because it's distracting to me. All right. So let me show you what's going on here. When you pay this first mortgage payment, I need you to see, remember, let's remind you what the mortgage payment is. The mortgage payment is $2,920.15. That's just principal and interest. This does not include taxes and insurance. Okay. This is just principal and interest payment. Out of that payment, $417.65 is applied to principal. That it goes to how much you borrowed. The principal amount is the amount that you borrowed. Okay. And on 400 on this loan, $462,000, only $417.65 went to pay down the loan. Look what went to interest, $2,502.50. How fair is that, ladies and gentlemen? How fair is that? $2,502.50. We're going to show you how this can work in your favor. Don, how in the world that paying interest of $2,500 a month can work in my favor? Look at all these interest payments every month. $2,500, $2,500, $2,497, $2,495, $2,493. So every month the amount of interest goes down and every month the amount of principal goes up. But you're paying back your loan here in the first year with $400 payments. That's what you're doing. $400 payments. The rest of this money goes to interest. When you look at cumulative principal here, you get to see, and cumulative interest, you get to see for the first year how it adds it up easy for you. In the first year on this loan, you're literally putting $5,163.83 on the principal, but $29,877.97 went to interest. That does not help you to pay down this loan. That money went to the bank. Here's my question to you. Is this how you want to spend your money? Okay. Can I show you how you can save a lot of money? Listen, if you want to know how you can save money, if you want to know how Jerome Pemberton and Anna and Franz can help you get into the house with no money down, and then the money that you have that you could have put down, let me show you how you can save tons and tons of interest with that money. If you want to know, put a number 9 in the comment section. Put a number 9 in the comment section if you want to see how all of this works together for your good. I want to see if somebody else wants to know. Put a number 9 in the, here they come. Facebook users just put, listen, they're coming in. The number 9s are coming in right now. I see what, can I get another one? Listen, put a number 9 in. Oh, there it is. Amari just put one in. So we're not only going to move into this house with no money down. Okay, no down payment, but we're going to show you how to use that money to your benefit. Are you ready? Here we go. All right. Let's say I move into this house in January. Okay. And I want you to help me out here. Okay. I want you to help me out. So come off mute. All right. I want you see these numbers. Okay. So this is January's payment. Okay. And I don't owe another payment until February. Can you tell me what February's principal payment is, please?
$2,500.
No, just the principal payment. Principal.
Oh, $419.91.
Okay, now with your knowledge of how mortgages work, Do I have to wait till February to give the bank this $419.91?
No.
If I had it, could I also give it to them in January?
Yes.
You know, that's called a prepayment, ladies and gentlemen. That's called a prepayment, giving it to the bank before it's due. Okay. But guess what the bank has to do? If you give this to them early, they have to apply that to principal. If you tell them, I want you to put this on my principal, and you don't have to pay any interest out of this money, not one dime. All of it goes to principal. So you're paid down. They have to subtract the 417.65 in January, and then they have to subtract another 419.91 in January. So you're paid down to here. Okay. So let me ask you, ladies and gentlemen, some of you have at least $419 sitting in a bank account making 1/10 of 1%. Some of you have thousands of dollars sitting in a bank account making 1/10 of 1%. Okay. Interest. They're giving you pennies to save your money. Okay. So this is what happens. If I'm paid down to here, if I give this money to the bank, Anna, I'm paid down to here in January. That means my next mortgage payment, would that mean my next mortgage payment would be on line 3? This would be February's new payment. What do you think about that, Anna?
Oh, that's amazing.
That's amazing, isn't it? So this is going to be my new payment for February. So what happened to the $2,500.24 in interest on line 2? What do you think happened to that, Anna?
Was it not applied because February wasn't paid in February, but it was prepaid in January?
Here's exactly what happened. You just eliminated $2,500 worth of interest you never have to pay because you gave this money to the bank early. Isn't that amazing? Okay, so let me show you. Let me put this on the screen for you. The interest is 6.5%, right?
Correct.
Point. Okay. 6.5. All right. That is the decimal. All right. And what they do is, if my interest rate is 6.5%, 6.5%, the bank takes this number and divides it by 12. This is the number the bank uses every month to charge me interest. That number right there. Remember, our first payment, our first mortgage principal was $462,000. So they take 1/12 of the interest rate and multiply it by $462,000. We're going to multiply it by $462,000 equals. I did it wrong. Hold on. Okay. We're going to take 6.5%. Okay. Divided by 12. Okay. That's 0.065 divided by 12. Take this number and multiply it by 462,000 times $462,000 equals $2,502.50. That's exactly what you have here. That's the first interest payment. Isn't that amazing? So now if I give the bank this $419.91 early, the bank's computer, they don't see this number because that's the number they have to use to calculate my next interest charge. They only see this number. So let's do that one more time using this number. So I'm going to bring up my calculator again. All right, let's bring up our calculator. All right, boom, there it is. All right, so we bring up our calculator and there it is. All right, so we take our 6.5%, 6.5%, we divide it by 12 again, equals this. So now I gave them the 419.91 early. So this is my new principal balance. They don't get to see this one because I gave them $419.91 early. So now they have to calculate my interest on this amount. So we're going to multiply it by $461,162.44 equals $2,497.96. I pay this one here. Isn't that clear to everybody? So I get to skip right over this one and I move to this one. So that big, huge interest number that they wanted me to pay, I just reduced it by $2,500.24 in interest I never have to pay. In fact, I am shrinking that amortization schedule. Payment number 1 is now touching payment number 3. I got rid of payment number 2 for only $419. Anna, Franz, what do you think about that?
I mean, that's amazing. Who, like you said, who wants to pay $1 million in interest?
Okay.
Right.
So what if we did this? I make my payment in January. Now that we know that to be true, what if I gave the bank the principal payment in January for $19.91, for $22.19, and for $24.47? What would happen to the interest on line 2, 3, and 4? What would happen to those?
You just eliminated it.
Just eliminated. And my next mortgage payment is on what line of my schedule now?
Should be number 5.
Exactly. That's exactly what has happened here.
Yeah.
For about $1,300, I saved about $7,500 in interest. $7,500 in interest I saved by giving them a little over $1,300. Isn't that amazing? Now,
That is amazing.
here's what we're going to show you. And I'm going slow here so you can understand this. Okay. What would happen? Let's take a look at cumulative principal and cumulative interest. Okay. Now remember, I saved up to buy this house. $46,000 in interest. I mean, as a down payment, $46,000 in my bank that I do not now have to use as a down payment. Keep that in mind. Okay, I have that money. I saved it up, and then I met you guys, and you told me, "Oh, you don't need that as a down payment, Don. You can move in with no down payment." Okay, come on, folks. The crowd goes wild. I don't have to spend that $46,000 now. All right. So now what would happen here? I need you to help me here. In 1 year, I pay my loan down by $5,163.83. And the bank wants me to pay them $29,000 in interest. Here's my question to Franz. Here's my question to Anna. Do I have to pay this $5,163.83? Do I have to pay it in 12 monthly installments?
You don't.
If I have it, can I give it to them on line 1?
Yes, you can.
They would have to subtract that from what I owe?
Yes.
Can we put that on the screen and do the subtraction? Okay. $462,000 and I'm going to give them the $5,163.83 that I would have given them over 1 year. Okay. I'm going to give it to them on line 1. They have to subtract that right away. So we subtract $5,163.83 all at once. I owe now $456,836.17. Isn't that exactly what that is here on line 12?
Yep.
Are you telling me I could be here in 1 month instead of 12 months?
Yes.
What would happen to all the interest payments between line 2 and line 12?
You just eliminated all of it.
Oh
right?
my gosh. Okay, now here comes the big question, ladies and gentlemen. Here comes the big question. I have $46,000 sitting in my bank that Anna helped me not to pay, Franz helped me not to pay, Jerome helped me not to pay, and I have that money sitting in my bank. I was willing and ready and able to put it as a down payment on this loan, but you told me I didn't have to. So are you telling me with that money sitting in my bank, what would it look like if I put that $46,000 as a prepayment instead of a down payment. Can I show you?
Please do.
Yeah.
We're going to scroll down, watch the cumulative principal. Okay, my finger might get tired of scrolling until I get down to $46,000. Okay, that's 1 year gone. That's 2 years gone. That's 3 years gone. That's 4 years gone. 5 years gone. 6 years gone. Going into 7 years, we're going down to $46,000. It's still not there. For about here it is, $46,000. Okay, I am on what line of my schedule now?
87.
87 months.
How much interest have I saved by putting that money that was a down payment? I use it as a prepayment. How much interest have I just saved?
Almost 208,000.
Oh my goodness. Did you all, folks, do you see what a marriage this is? No down payment. We can use that money to kill interest and knock, let's see, 84 months. That's 7 years. 7 years, 7 years, and 1, 2, 3. I can knock 7 years off my mortgage in 1 month with that same money that I was going to use as a down payment. Now, if I use it as a down payment, the amount of money that I would be putting on my mortgage, I'd have like a $416,000 mortgage. You still have a $416,000 mortgage here, but you're not starting on payment number 1. You're starting on payment number 87. I want to hear you guys talk about this right now. What do you say to this?
I am speechless. It's like, all I can say is, wow. It's something that you don't realize. You don't do that math out of your head. You don't realize that. And it's like, wow, you rather put it in a down payment than avoiding paying over 200. I'm in shock.
Yeah. It's definitely something that they don't teach us in school, right?
No.
Or any professions. It's it's just one of those things that you learn from people like you, right? So definitely amazing. Yeah.
So, ladies and gentlemen, if you have a situation where you have a company, 2 companies coming together to help you not put that money as a down payment and strategically show you how to use it as a prepayment, you can save thousands of dollars in interest. In this case, hundreds of thousands of dollars in interest. You never have to pay the bank. Okay. What if you never did anything else? You put this down and you just made every payment after that. Can I show you just a little bit of math? Can I show you just a little bit of math here? Okay.
Yes, please.
How much interest that the bank want us to pay on this? Okay. How much interest did the bank want us to pay? The bank wanted us to pay a total of $589,000 in interest. So when you see this, ladies and gentlemen, it's just a suggestion. It's not a law. It's a suggestion, not a law. We suggest you pay us $589,000 in interest. And we assume they mean it's mandatory. It ain't mandatory. Okay. So we're going to put down $589,000. Okay. $589,254 in interest that the bank wants. If we use that down payment money, of $46,000, we come down to here. Okay. 46,000 right about in here. That's $207,000 we don't have to pay. We're just going to round it off to 207,000. So we're going to subtract 200. Let's see. Wait a second. Where was I? Yeah, 207,000. Okay, man, I did it. I got so excited. I messed it up. Don't listen. Stop listening to me. Just do this yourself. Okay, watch this. So we're going to go back up. We're going to get the 589,000, and we're going to subtract 207,000. Subtract 207. Come on, Don. Delete $207,000. Okay, we're going to subtract that. Okay, 200. We need one more zero. Okay, 207,000 minus that. Okay, we're only going to pay $382,000 in interest instead of $598,000 to acquire the same property. Okay, now strategically, I need y'all to listen to this. If you had a situation where you could track how much you're spending each month and how much you're making, and then when you track that, you know about how much money you have left over each month. Okay, how much money do I have left over after paying all my bills? Take that money that's left over, how easy is this, and say, I'm going to put that money in my savings account. I paid all my bills. We had some fun. We spent some money on fun. We did everything we needed to do. And now any extra money we want to put in savings. What if there was a program, an AI program that says, keep that money in the bank for 2 or 3 or 4 months, take out the right amount of money out of your savings account and apply it to the loan, and knock months and years and thousands of dollars in interest each time you pull money out of your savings account and put it on the mortgage. This is how you're out of debt in 7 to 9 years, cutting your interest costs by 75%, ladies and gentlemen. And instead of $1 million for this, just kind of imagine instead of $589,000 in interest, 589,000. Okay, we're going to do this. Let's say we could spend $190,000 in interest to acquire the same property in 7 years. What could happen? What would happen with the thousands of dollars you didn't spend on this? Could you invest it in your family?
Most definitely. Yeah.
Definitely.
Invest it in your family and put it in a mutual fund. Put, however you want to invest it, put it in some life insurance, put it in some permanent life insurance that is going to make compound interest for you. Okay. And you can take that money that you would have given the bank and turn it into over $1 million. If you could pay that house off in 7 instead of 30, you could start putting money into some investment. And by the time you would have paid that house off in 30 years, you'd have over $1 million in your investment using money you would have had to use to pay the house off. It's amazing. Ladies and gentlemen, do you see here? Talk to me in our final minutes here. Talk to me about what you see here as a possible collaboration. And you go first, Franz, you go next, and then Jerome, you're going to end up from your point of view, Anna. What have you seen here? How can we work together?
I'm sweating of excited. Like I'm so excited to hear this, and I think that for the first time I can understand our clients when they hear what we do, what Jerome has done for over 25 years, and they don't believe it, and they're like in shock, like, whoa. I feel like that right now. So I understand their point of view when they don't believe it. It's just I can't believe what's coming up for people, for opportunities to purchase a home, to be out of debt. I'm so excited for what's coming up for them. For their, I can't even explain it. It's just I'm even shaking a little bit because I'm just realizing everything that is possible. They don't have to carry that much weight on their shoulders in the future, and it's amazing.
Wow. Thank you very much, Anna. Franz, what do you have to say?
It's, again, I'm a firm believer of like learning everything that you could possibly learn to save money and multiply your money, right? So, like the partnership that I see is like saving money on purchasing a home, and then just like how you explained that whole paying off your mortgage in 7 years, that's another way of multiplying your money, right? So now you're creating generational wealth for your family, right? You don't have to be stuck, um, doing the normal things. We're no longer in the normal ways of, doing things like, our parents saying, put 20% down or do this and do that, right? Um, it's just really a matter of listening to the people that knows and has done it, right? So the opportunities that we offer and that you offer, it's definitely going to help people create wealth.
Exactly. And Jerome, what do you say?
I'm speechless too, just like Anna and Franz, because we battle every day. People always coming to us about the rate, and they just hit us with rate, and then we try to talk to them more intelligently. And it's like, well, what about? Let's not focus on the rate. Can you just imagine? I'm talking about the relationship that we're building. Is that? Can you imagine? We help you purchase this house with very little money out of pocket, and can you imagine that you're not going to have a house payment, no mortgage anymore, and all of your debt, done with this, right? In the next 7 to 10 years, it's mind-boggling that people are doing that. But with your AI methodology, what we can offer to clients, we got people that don't even believe us. They don't even believe what we do. They don't even believe it's there. So Don, are people going to really believe that this is what's happening, right? And they could be debt free in that amount of time. It's just I'm shocked. I'm thankful. I'm at awe, even for myself and for Franz, and even for a lot of our clients, that they have the opportunity to be debt free in a shorter time than they think, and they probably retire a lot sooner just because of this one strategy, this other strategy that we can add into our client's life.
I have one more thing to show you that is counterintuitive. You talked about right now interest rates are around 7%. Okay. Right. Interest rates are around 7%. And builders are offering incentives to buy their house. And one of the incentives that they're offering is they're buying down the rate for you.
Yeah.
Okay. They can get you down to a 5%. Okay. So if this loan was 7%, okay, here's what they're doing. Okay. The payment would be here, $3,073. Okay. $3,073. The bank would want $644,000 in total interest. So here's what they're doing. So we're going to duplicate this loan, duplicate this, and say, what would be the difference here between this and a 5% rate? Okay. The builder is buying it down to 5%. And most people are enamored with, I want to get the lowest interest rate possible. I want to get the lowest interest rate possible. I want to show you something that nobody else is going to show you here. Okay. Remember this, you attack the loan with the principal payment. So control the principal payment and you control the loan. Control the principal payment and you control the loan. Interest payments you skip don't matter. Here is the interest payment on a 7% mortgage here. We have $378. We have $380. This is the 7% mortgage. So if I want to knock off $2,600 in interest, all I have to do is prepay $380.91. If I want to knock off 1 year, okay, I make this payment here, prepay $4,693. All right. If I prepay that on the first month, my next mortgage payment for the next month is actually on line 13 of this schedule. I can knock off a whole year and save over 30 grand in interest just by doing this. Are you hearing me, everybody? Yeah. Now, if I let my builder buy down my rate, remember these two numbers, 4,693.08 and 380. Okay. All right. So let's go to the 5% loan. Okay. Look at my principal payment now.
Wow.
It's $557.43. So if I want to get rid of one line now, I have to pay $557 to do that, not $380. This is if I lower the interest rate. If I lower the interest rate, I increase the principal payment. So at 7%, $4,693 wipes out 1 year for me. And my next mortgage payment is line 13. This same amount of money on a 5% mortgage, $4,693, $4,693, it gets me right about here. Knocks off 8 months instead.
Yeah.
If
John,
you
thank you for that illustration, because that's what happened yesterday in our meeting.
Yes.
A client went to the builder, Anna, remember yesterday, and he called in. All he talked about was a rate, Don, of getting 4.5%. And how much was he going to put down, Anna? How much?
He was putting down
$15,000.
No, he was putting down 64,000.
Mercy.
He's going to put $64,000 down.
Yes, and he wanted to put it down.
And he was fighting with Anna because he didn't want to hear what we had to say, because his way is the right way.
Yeah. Well, listen, this is why we need to show people. This is so hard. If you show people the numbers, they cannot deny it. You can try to explain it to them, but they have been told best practices for so long that that's all they can see. But when you show them the numbers, how much interest they're actually saving, now they can do some simple math. If I do this, I'm going to pay this much interest doing it my way. If I do it your way, here's how much interest I'm going to save. It changes the game when they can see the numbers, ladies and gentlemen. So here's what we need to do is let them know, here's what's happening. What I would ask the builder, what are you paying the bank? What are you paying the bank to get this interest rate? Because you have to pay for that.
Yes.
Work it into the deal where I get credit for that money.
Yep.
And I'll take the higher interest rate because I can afford the payment.
That's right.
Wow.
Give me that money. If you're paying $12,000 to $17,000 to give me that rate, let me show you with $12,000. I'll take the higher rate. Okay, give me the $12,000 and I'll put it on this mortgage and knock off 30 payments and save myself $79,000 with it. Give me the 12 grand. Mr. Builder, I'll take the higher interest rate. You don't have to do that. Let's work it into the deal some other way, because I don't want that higher interest rate. I'll take this. I don't want the lower interest rate. I'll take this and knock off $70,000 in interest with the money you are going to use to pay to buy a cheaper rate. See, when you understand how this thing works, ladies and gentlemen, it all comes together for you. And I want to end it with this. Thank you, Anna. Thank you, Franz. Thank you. Thank you, Jerome. One more time, how can they get a hold of you? And we'll tell them how they can get a hold of the P.I.L.L method. Go ahead. How can we get a hold of you guys?
Right. So they can reach me at 281-220-9960.
Okay, 281-220-9960. 9960. We're going to put that on the screen as well. Okay. All right. There it is.
For
Go
the
ahead.
Spanish, to contact me for the Spanish line, the number is 281 688 5259.
59. Put that in the private chat, and we'll put it on the screen for you. Okay. This is the Spanish line, 281-688-5259. Put that in the private chat, and we'll put it on the screen for you. So thank you very much. This is how they can get a hold of you. And then you'll take them through the process of how to buy a home with no money, with zero down payment. Zero down payment. Zero, no dollar down payment. 0%. I don't care how you phrase it. No money down payment. And there's a possibility that you can pick up a check. You can pick up a check at closing. Listen, I'm tired just thinking about it. And then we're going to take that money that you didn't have to pay as a down payment, and we're going to use it to knock off years off your mortgage and save you hundreds, not tens, not fives, hundreds of thousands of dollars in interest you don't have to pay. So folks, go to ice10k.com, ice10k.com, and make sure you get your savings and earnings report. And Jerome, thank you for putting my book up. Here's the book. Out of 33 million titles on Amazon, this is the only book on Amazon that even begins to explain how a mortgage actually works. And today, folks, we only hit a tip of the iceberg. There is so much more you need to know about how loans work so you can save even more money. But it starts here with the book, so you can start teaching it to your children, to your grandchildren, to your nieces and nephews, because the simple math that we show you here, an 8th grader could understand. We need to know why we're not being taught this in school. So listen, let's work together. I'm looking forward to working with your team, and our team is looking to work together so that we can save people lots of money so that they can own their houses, get out of debt, and put that money instead in building up generational wealth and increasing their net worth, and not let the bank bleed them dry because we don't know how the system works. Thank you, everybody, for being here today. Okay, so what is Marie Lawrence? What do you have to say for us who's watching us on, let's see, does Jerome do this in every state? She's watching us. Jerome, do you guys do this in every state?
Yes, we do it in every state.
Every state?
Every state.
Across the country?
Across the country. So we're in Houston, and Dee Monet is in Florida. She closed in Florida.
Oh, okay. Wow. So folks, listen, the P.I.L.L method is international, so we work in every state as well as several different countries around the world. We're just letting you know that we are changing the game today. We're changing the game. Thank you so much, everybody. Thank you guys for being here. And don't forget that we're going to be right back here on Sunday. We're going to be back here on Sunday, all right, at 8:30 a.m. Central Time, 9:30 a.m. Eastern Time, and where we're going to be talking about doctors eliminate all of your debt in about 7 years. What do you mean? The mortgage and all their huge student loans, which the student loans for doctors and lawyers and all kinds of professionals, their student loans are as big as mortgages. We're going to show you how to get rid of the mortgage and the student loans in about 7 years for high income earners. You see, high income earners think that because they make good money, they don't realize that they can save $200,000, $300,000, $400,000, $500,000 in interest they never have to pay. So because they make so much money, they're not looking at how to save that money. Well, I'm going to tell you, if you're a high income earner, you want to definitely see us be on Sunday show and ask your questions, where doctors can pay off their mortgages, student loans, and all other debt in about 7 years. We're going to talk about that on Sunday. Listen, ladies and gentlemen, thank you very much for being here today. Happy Sabbath to all of you that apply. I'm going to be in church tomorrow, so don't call me tomorrow. So I want to make sure that you're here bright and early on Sunday. I want to thank Jerome and his team for being here on our show today. You have blessed our hearts. All right. Thank you from the P.I.L.L method, everybody. We'll see you on Sunday. Have a great weekend. Bye-bye. How many want to know how to pay off all of your debt in an average of 7 to 9 years? You can do all of this without refinancing, without change to your budget, without sacrificing lifestyle.
Me and my husband do the P.I.L. method, and last year we were able to pay down $33,000 on our mortgage without feeling like we were poor. We still did tons of entertaining things and enjoyed our family.
You don't have to eat beans and rice every day. You don't have to cut up your credit cards. You don't have to drive a 30-year-old car. You don't have to sell pizzas at night to pay off your mortgage. All you need to do is pay the bank less interest. That's what we're talking about today. Here is what P.I.L. method stands for: prepayment of principal, isolation of principal amounts, leverage, and liquidity. You understand it? You have a way of getting out of debt more efficiently. The interest rate you're quoted is not the interest rate you pay. You think you're buying a $500,000 home. The true cost of that home is what? $758,000. Total interest paid as a percentage of principal, 51.777%. That's what's going on with this loan. The ability to read and defeat an amortization schedule is not taught at any level of financial education. I need you to understand the power of a penny. You will not hear what I'm talking about from Dave Ramsey. Do you know why? Because I own the copyright. I literally wrote the book.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L. method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.